using kind of the same policy that we talked about for premiums, we issue a policy with an effective date of July 1st, 2019, with a face value of $10,000. And then the other assumptions, we'll look at a death date as of December 20th, 2022, and a report date. And so the company's notified of the death on December 28th, 2022. And then the actual payment of the claim is done in January of the next year. So let's look at the journal entry of recording the initial reserve. And this example, you're reserving, you'll usually only make adjustments to the reserving on those report dates or kind of the valuation date. So because the policy was issued on July 1st, it doesn't necessarily mean that day they'll go in and adjust the reserving. It's usually more done on the valuation dates when the actuaries will go in and look at your policies and then determine what should be recorded as the reserves. And so for this example, we're going to look at this policy specifically. And then, as of December 31st, 2019, there'll be this reserve that's recorded. And because it's a new policy, it might be considered lower risk. So even though it's a $10,000 policy, we're going to say that only a $500 reserve is required. And so we're going to record a life reserve of $500, which is going to be on the balance sheet, the liability section of your financial statements. And then the change in reserve of $500 will run through the income statement as an expense.